What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, we have our core list of companies, many of which are coming into an earnings cycle, and then I have 8 trade ideas to share with you towards the end of today's video. Now bear with me, I did some traveling this weekend, so the video is coming out late. If you're tuning in on a Sunday night, let me know in the comments section by leaving a comment that says Night Owl. Without further ado, let's jump directly to the charts. Kicking things off on our SPY weekly chart, talking about candle structure and location as we always do. Certainly a full-bodied green candle with a tiny little lower wick here, indicating that the buyers really stepped up at any sign of selling early on in the week. What I think is even more impressive though is the location of this candle. Obviously we closed here at all-time highs, but if we look at the lows, we were essentially gapping down out of a 3-week balance or range, right? And the fact that we've engulfed that entire 3-week range over the course of 4 days really on high volume, that to me is saying, extremely bullish market here. But did this really come as a surprise? What have we been saying for the past 3 or 4 weeks now in this marketplace, right? It's really not a good idea to try to time a market top, and rather we buy pullbacks in bull markets. So was this support trend line ever violated? No. Was this support trend line ever violated? A little bit, but we pretty much gapped into it, which would give us a reason to believe we might see a reaction in the other direction. So hopefully you were able to take advantage of this pullback in a bull market based on what we've been saying over the past couple of weeks. Now, does it happen this way every single time where it rebounds and gives you an impressive return over the course of 4 days? Absolutely not. But being able to take advantage and recognize this situation is extremely powerful. Now, sometimes do you get stopped out and we do something like this? Absolutely. But you have to be able to show up to the plate and essentially swing the bat, if you will, whenever you're presented a situation like this. So, that aside, let's talk about what we can look forward to into this upcoming week of trade. If we just pop our levels back on, I want to point out a couple of critical things. Obviously, we formed the hammer off of the 50 SMA. We talked about that in the midweek market update. We talked about single prints under here. But because we've essentially seen now 4 days of what I would argue is pretty much straight up, and we've left a massive gap in our wake, I would say the market is probably ready for either a little bit of sideways consolidation, maybe a couple days worth of balance, or a little bit of a correction through pullback, or price as we call it. So obviously if we consolidate sideways through time, the ideal area to hold is above our prior all-time high here at 437.88. On any deeper pullbacks, first look for the gap fill area, so that's underneath 436.82, fills down to 435.67. If we really get an aggressive pullback through price, I would keep a very close eye on this support trend line, which again is the weekly support trend line. If I just zoom this out, you can see where it's anchored from way back here, from what looks like late October. And then if we use this as the first touch method, that's the anchor point, or the first touch anchor, I suppose you would call it. This is still intact, right? Obviously we gapped underneath it, but reclaimed it very early on in the week. So again, that's why we're really placing a lot of emphasis this time around on holding it as normal, this support trend line. That would also provide a nice daily higher low, right? If we just zoom this out one more time, just a little bit this time, and do something like this, we have a set of lows, we have a higher low, and now we have a new higher low. Now that we've set a higher high, we can essentially afford to pull back and form a new set of daily higher lows to continue this uptrend, something that might look like that. So to give you an idea of that price area, it might happen around 431.70. That would be a super support, as we call it here on the channel, but anything underneath, very, very cautious here around 428.33, simply because we know there's single prints there. So poor market structure essentially. Go back, watch the midweek market update if you want to learn more about what I'm referring to in terms of single prints. I also want to make your attention to that earnings cycles is going to impact what the broad market does, and we also have the FOMC meeting minutes on Wednesday. Okay, so there could be the chance for a quiet market up until Wednesday, something like this, and then volatility in one direction or another once those meeting notes essentially are released. So QQQ, obviously no gap. That is not in sight here. The gap did fill on Friday, so we repaired structure there, which would strike me as slightly more bullish. The market did what it was supposed to do in terms of repairing structure, but still 5 days of almost nearly straight up action. Again, with earnings coming up, I could see the market waiting, kind of holding its breath, going sideways for a bit early on before we start to see things like Apple, Tesla, Facebook, Microsoft start to report, which is obviously going to impact our Qs. So watch for a little bit of a breath hold early on in the week here in the Qs, sideways action, and then earnings to really determine whether or not we're going to see follow through to the upside or more of an aggressive pullback. Now, obviously upside levels, and we didn't really talk about this on SPY, but that's sort of a given that we're looking at blue sky levels, whole and half dollars, intraday levels that do form. On any sort of pullback in the Qs, the ideal area to hold would be the low end of this consolidation. Just to put a value to it, it's around 355.20. Okay, it would be ideal to hold there, just because we formed that lower low, excuse me. You can tell it's late here, but we formed this here, which is technically below the low of this area of consolidation. So I would want to see that 355.20 hold on any move back into this, and then that would potentially form some massive, daily bull flag, right? Something that could look potentially like this over the course of the upcoming, week and or two, and then you obviously take the breakout into blue sky territories after it's digested this massive move to the upside. Now, I'd start to get really, really cautious underneath this sort of low here, which was set on Monday, obviously, because that would open up the door for a retest to here, 50 SMA, which is closer to the prior breakout point, prior all-time high, which, we sort of double topped at it, right? That's going to be closer to 342.36. Again, it's going to have to be a nasty, nasty earnings season to really bring us down there, but those are the levels I would pay attention to. Probably a pit stop here around this 349 whole dollar, but not placing a whole lot of emphasis on that particular level. And then last but not least, we have IWM Russell 2000 and the small caps. And as always, I just like to leave it zoomed out, give you an idea of where we're trading at in this overall range. Very close to the middle. I would say certainly in the middle third, if you break this into thirds instead of halves, as opposed to closer towards the bottom end of the range or closer to the top end of the range. And as we always say, this is never really a great place to start initiating new positions. So rather looking at IWM as more of a still neutral risk. It's not risk on and it's not risk off at the moment. It would only be risk off if we really take out 208 to the downside and get going. And it would really only be screaming risk on if we started to move up and out of this really long period of consolidation that we've been in, going on 7 months now, essentially starting way back in the earlier parts of January. So to me, IWM still just kind of screaming neutral. If you really do want to trade it, a break of 222.50, probably trade up here towards 227, then all-time highs essentially after that. Any rejection here, just look for the rollover, probably to the support trend line and or 215, as opposed to coming all the way back down and revisiting the 208 level. If you've made it to this point in the video, I'm sure you're enjoying it. Let me know in the comments section or by simply leaving the video a thumbs up, and consider subscribing to the channel. Jumping right into Apple, obviously mirroring what we have in the Qs, coming up from the bottom, if you will, to probably retest the 150 area. I wouldn't really take the break of 150 considering the distance we've traveled so far in the past week of trade, and I'd really rather like to see it do something like this, another maybe higher low on the daily, and then take the break. Now, the thing that's going to make this trade interesting is going to be earnings, right? That's going to obviously throw a wrench in whatever, I thought might happen here, whatever we just drew out as a potential scenario. So keep in mind a gap could kind of ruin whatever I've just drawn, but that would be the ideal case to the upside for the bulls. Now, to the downside, or a more neutral outlook on Apple, it would really be consolidating anywhere in this area. So all the way down to about 141.69. I wouldn't want to see it break, but rather do something like this. Again, maybe on an earnings gap down, it can, hold up in this range. Overall, put in a larger daily bull flag, something that would look like this, in which case, over time, we would then take the break up and over 150. Now, I would really start to get concerned under 141.69 simply because we have this prior pullback area, right? We did this back in time, and then on this massive gap down Monday, that's almost the same area that held there. So if that breaks and coincides with the trend line break, we're going to target the gap underneath. So not a huge range in terms of the actual size of the gap, but that is the first target from 137.77 down to 137.30. After that, watch for this here, 50 SMA and the prior breakout point from in here, 135, to act as super support with earnings coming up. Again, a lot of these things will be a coin toss. So Netflix is a perfect example of why I say coin toss. Obviously, the market was extremely bullish in the last week's worth of trade, but if this is any sort of foreshadowing for what may come with the tech earnings, that's not so hot, right? So kind of a coin toss. That's why we never gamble on earnings with options. I'm not going to do that spiel. Here on Netflix, though, obviously it's in the rearview mirror, and we're now looking at more of a daily bear flag, 2 days worth of consolidation down here towards the lows. If it breaks and takes out this sort of 505.75 mark, look for 500 psychological, and then really, that certainly has some structural import, but after that, this is probably the more critical area of support that you want to pay attention to, around 487.30. Now remember, we've had a really tough time going long on Netflix for a while now. You can go rewatch the videos. I've said that for some time, and I think it really has to do with the fact that it can't get out of its own way. I just sort of, came to this realization a little while ago. It's like, if you just look at the range it's been trading in over the past year, it just hasn't moved, right? So Netflix, to me, it still doesn't strike me as something that's overly something to be bullish on or bearish on. Rather, just take it for what it is, day by day, sort of little scalps. If you see a little intraday pattern forming around one of these key daily levels, certainly take it. But a larger outlook on swings, Netflix just isn't really it for me. So we covered downside levels to the upside. If we really get going again on an intraday move, looking for 521 to the upside, and after that 533.81. Say this thing gets rocking, and again with earnings in the rearview mirror and being sort of bearish, I don't expect this, but after that we'd really be looking at 544.70. So Tesla earnings this week as well. That's going to kind of be an interesting one to watch on the 26th there on Monday. Let's just see, is that before or after? That will be, let's see, at 4:30. So after the bell on Monday should be some fireworks here in Tesla. Consolidating into this triangle, we've discussed how it held this prior area of, breakout at the 630.50 mark. As long as it continues to hold that, I do think the chart looks pretty good here. Obviously, the next move to recapture some of this upside move would be at 677.50 or 667.50. Excuse me. Again, I know it's late here. So any move like this would strike me as bullish, and then you're taking the break over this pressure cooker top at 694.18. 700 psychological is kind of baked into this area. You can see that upper wick from in here, but really if it gets going, you're looking at 750, I would call it for round numbers sake. The same sort of like the first initial move up and over this 694, look for your 710 as that, probably same day target, and then after that, that's when you watch out for that higher target up there. Now, if earnings are a complete flop, obviously you have 50 SMA and prior breakout point as support here, 630, but underneath you're starting to look at 600 psychological, and then this tiny gap underneath. Just like Apple, it's less of a gap to trade this range in here, but rather to act as a target to the downside. So Alibaba, as we know, words don't even describe how ugly this chart is. We still have a massive gap in play here. Hammer on Friday. Going to give me a slight inclination that maybe the bulls want to do something about this gap above us. If we get into it, look for it to start to fill up towards 211.37. That is a little bit of a daily resistance there, but the gap technically closes closer to 211.56. Anything after that, probably look for these highs around 216.48. Again, with earnings, how choppy this is, I wouldn't look to trade it as a swing, rather intraday trades only here on Baba or anything in the Chinese sort of space that's seeing all of these headlines impact what's going on with the name. So anything under this 204.25, just look to trade down towards these lows. I would argue the bubble is more accurate than this level down here at 198.26. So Facebook, my goodness, what a day it had on Friday, and just, absolutely massive gap up and a follow-through day, right? It's not like it gapped and faded, filled the gap. No, complete runaway train here on really high volume. So I'm not even going to bother looking at what the news was. I was on the road. It's just, it is what it is. It's in the rearview mirror now. Obviously, earnings are going to impact this one, and we have some targets to pay attention to. The downside, the gap fill and support trend line are going to coincide there at 351.71 on any sort of major aggressive pullbacks. That would be an easy buy in my opinion, just because we have tight risk, right? Stop goes just underneath. You're looking for some sort of pop, probably to at least revisit the top of the gap at this 356.75 mark. Now, if earnings gap us down even further and just, send this thing spiraling out of control, I'd really watch for, the 50 SMA, any interaction at that level. And then this would kind of be my line in the sand here at 337.50. If we start to take that out to the downside, I'd lose my, more aggressive bullish slant here in Facebook. Now, to the upside, downside, obviously any gap ups and follow through is just blue sky levels, $1.5 intraday levels that do form. Hold on and just kind of ride the long as you can, using a trailing stop higher to just take advantage of and lock in risk if there is any sort of pullback at a critical level that we may not know about somewhere up here in blue skies. So NVIDIA, the bearish reaction came before the split, and now we're starting to rebound after the split. So that to me is fairly interesting. Earnings are a little further out, so not as big of a concern. I really like the 2-day balance from Thursday and Friday, and I'm definitely looking for the long above this resistance trend line here out of the 2-day balance, in which case you do something like this to fill up the triangle above. This, of course, is that triangle that we're talking about, up to the all-time highs, essentially close to 208.73. After that, blue sky levels, $1.5 intraday levels that do form. Now, if there is any sort of violation of the 2-day lows, it's the exact opposite. Instead of filling up the triangle, it's more like fill up the rectangle down here towards the lows and the 50 SMA at 176.66. This is also going to form some sort of H pattern. And depending on the reaction here at the lows, if we just dip below and come back above, that's going to be a H is for hell for shorts. Now, if we get to the lows, consolidate above, and then form a flush point, that's hell for longs. And in that case, you're looking for the flush probably lower to our next major critical area of support. I would say it's actually in here. We did have to adjust levels after the split adjusted price came up closer to 172.25. After that, you have 162. So Microsoft, also another gapper and goer on Thursday and Friday. So that gap is obviously the downside target on any sort of pullbacks into the support trend line as well. So anything under 283.50 fills down to 281.55 and is going to coincide with the support trend line. Again, probably an easy long there with a stop just underneath, looking for the bounce back higher to revisit those all-time highs. Now, if we get into the support trend line and it just slices right through like butter, you're just looking for this next major area of support at 275.25. After that, this gap, again, just like everything we've discussed so far, this isn't so much a range gap to trade into, but rather a target to the downside, and then walk down some of these poor levels, just like we had in the market over the past couple of weeks. Here in Microsoft, we also have that similar poor structure. So these aren't, areas that you're going to place a whole ton of importance into. Rather, check them off as we move, if we move to the downside, as yes, this was repaired, or no, it was not, and it will remain on the chart. Again, with earnings on any of these charts, all of the down and upside levels that we've discussed could be in play. And last but not least, the beast, we have Amazon, and this one recovered perfectly sort of around that area of the prior all-time high breakout point, right? So this is kind of what we outlined in a number of past videos, looking for something like this to occur, and it's exactly what we've started to see. Now, I went long Amazon in some longer-term accounts, not for scalps in here, but this to me is displaying bullish activity, right? We saw the break of the level, we retest the level and hold it. I don't see why we wouldn't now at least hold outside of this overall yearly range that we put in here in Amazon. So to me, looks good for higher. I would just monitor this one and the broad market for, that slow dribble up higher, earning or sideways, right? One or the other, something like this, or the slow dribble up higher before earnings. And then obviously this is going to throw a wrench in whatever I say. So we have some levels mapped out. If we can take out 36.77, look for the all-time high closer to 3,750, 3750, and then to the downside, right? Obviously, you want to see this one hold at this point here at 3620, but if it gives and we violate this support trend line now, your line in the sand has to be here at this, let's just call it 3550 mark. That to me is the prior breakout point. Want to see it at least consolidate, do something like this sideways and not violate it to the downside. If we do start to take it out lower, I would start to be, a little bit questioning, okay, is this just a massive look above and fail? And just to remind you of what that pattern would look like, here's your consolidation range, right? This is technically the look above and fail. What do we know about this pattern? Typically, we target the bottom end of the range. So I don't say that to, be all doom and gloom about Amazon, but it's a very realistic possibility, right? So we're monitoring Amazon closely here at the prior breakout point. That's why it's the line in the sand at 3552, or just call it, 3,550. So if you've made it this far, thank you for bearing with me in my sort of late night drowsiness or choppiness in terms of discussing levels. But United Airlines is our first trade idea. And what I like about it is the fact that we have passed earnings and now we have a 3-day balance in play. There's energy building inside this, right? So to the upside, we take the break over the 3-day balance highs to revisit this prior area of interest closer to 50, the round number. Anything after that, probably walk it up here towards that 52 mark. Let's actually just pop a level on there so we know know. So 51.70 would rather be the more accurate target. To the downside, obviously there's a gap underneath us, so you can take the break under the lows to try to fade into the gap. Again, that's probably more of a day trade and not something that you watch out for massive follow through on. But given the fact that, you know, we have seen some significant sell side activity, taking out this 3-day balance highs could cause a miniature short squeeze. Okay, I know that term gets thrown around like it's some sort of buzzword now, and I don't mean it to be that, but it literally could happen taking out those 3-day highs. It doesn't mean that this is going all the way up to do something like this. It simply means some shorts could cover and you could see more buying action in this name. Next up, we have Comcast, and this is an earnings sort of contender, right? It is around the corner on the 29th, which is on Thursday, but the pressure cooker top and ascending triangle just gets better and better. This has been on our radar for some time, and I just wanted to bring it up again to say we are testing the top end or the breakout point here at 58.60, just about to the upside. Blue sky levels, $1.50 intraday levels that form. To the downside, if you want a better entry, maybe wait for one more pullback here, but you're really pushing your luck now that we've tested this a number of times. So 3, and then 4, 5, 6, even 7 down here. So, you know, to me, this just looks ripe for a breakout. Next up, we have BMY for Bristol Myers Squibb. This one already did break out. We have earnings to contend with on the 28th, which is, of course, Wednesday. But because we saw the breakout, now it's just a matter of do we get some follow through. So keeping a close eye on this. Longs above the high of day there from Friday, looking for continuation into blue skies, any sort of consolidation. Look for it to hold the breakout point and do something like that into the future. Next up, we have Walmart. This one has not broken out yet, and it also doesn't really have an earnings cycle, you know, too impactful, you know, in terms of proximity to time. So looking for the breakout here over 142.60 to probably come up and revisit this high from in here. To put a value to it, it's going to be around 144.50. So, you know, about a $2 move available there in Walmart before, if you really scrunch it up, you know, you can start walking these things up, you know, higher and higher and higher. I would say that this is probably the next major target, around 148 to the upside here. Not interested in taking this trade. Let me actually fix that here, auto. There we go. If we start to trade underneath the 50 SMA, so any sideways consolidation is great. It's actually healthy for this pattern for the break like this, but if we violate the 50 SMA and start to trade down here, would not be so interested here in Walmart. McDonald's is kind of just like Bristol Myers Squibb. It already did get the breakout and it was out of this range, right? So we had this tight range in McDonald's, took it out to the upside. It's now just a question, again, do we get some follow through over the high here at 245? Keep in mind earnings are on this one are still around the corner here on the 28th, which again is a Wednesday. It looks like it's in the morning. Okay, so that was going to be early on, and we will know whether or not that will be a contender to trade with. Again, just like Bristol Myers Squibb, any consolidation above that breakout point would bode well for something like that into the future. Not interested if we start trading underneath. That would be more of a look above and fail, in which case, actually, you know, let's just go through this in full, right? Your target would probably be closer down to 228. So a potential setup here, if earnings are a flop, would be look above and fail. Boom, target is down here. So that's how you could play that in the bear case scenario here with McDonald's. Gilead Sciences is up next, and this is more like the ascending triangle in Comcast. We can actually put in the support trend line. It's actually kind of sloppy here. It would look something like that. Obviously, we violated it on this gap down from the prior earnings cycle, but the breakout point is over 69.40 and or 70, right? We have a couple of touches up there as well. If we can clear that resistance zone, just kind of scrunching the chart up and looking left, not a whole lot to contend with in terms of market structure until 72. So about a $2 move, 2-point move here in Gilead available. And then after that, of course, the highs, I would have to actually, to feel comfortable giving you a solid target here, get some more time involved. And yeah, looking left again, right? Like I would have been cherry picking that there when obviously the target would be up here closer to 78.25. So I'm not saying we get there immediately in 1 week, but I am saying, you know, those are reasonable targets to the upside considering how long this pattern has been, you know, taking to play out. CHWY is up next, and this is more of a poor man's inverted head and shoulders. Remembering that here is shoulder 1, head, and shoulder 2 is kind of like this. Even just looking at this as a pressure cooker top from the daily time frame at 87.50, I would be watching out for first bump in the road here at 92.50, and then looking left, remembering that prior support will turn into resistance closer to 98 or 99, call it $100. Nice psychological round number. Earnings on this one will not really be a contender. Won't really be interested in trading this if we start to fail underneath the 200 SMA, the green line here, and really just not seeing this uptrend continue, right? So we have lows, higher lows, higher lows. If we take that out and start to violate that, there's no clear support trend line, but if we form a lower low, again, that would sort of be like, not really interested here in trading CHWY. Then the last trade idea here is on Snow, and Snow is just coming back on our radar because we're approaching this breakout point here at 274. 274, pretty much the whole dollar, 275 if you want to round up. We saw this massive run up into it, formed a bit of a daily bull flag, failed out of it, but we held this prior area of consolidation. So that to me is sort of like forward and upward progress, making moves outside of this prior range, holding on to it as support this time instead of coming back down underneath, using it as resistance or an area to chop around. So to me, that strikes me as bullish. Obviously, the break over 275 puts into play 300 psychological up above. Remember, that is prior structure from in here, and after that we have 324.50. So quite a lot of room overhead here in snow, and I really like the fact that it is starting to respect that 50 SMA as a sort of technical trading stock. So that being said, I know this was a mouthful. I know it came out late. If you enjoyed the video, made it all the way through, let me know down below in the comments section or by simply leaving the video a thumbs up. That being said, I wish you all a green trading week, and I hope to see you in the Discord on Monday.